try to go and get $20,000 out of a bank account where, to be honest, it was quite horrible. If you get on the wrong side of the government, your ability to transact can be shut down.
Are they dying off?
Probably.
What do you think is the biggest misconception in your friend and family circle about Bitcoin?
I think misconception, I think it starts with just even before the misconception part, is that they're just not looking at it through a different paradigm. All right. And I know we talk about this being a paradigm shift, but I think looking at it through any conventional lens generates automatically misconceptions about what it is. I think that, we've seen 15 years of history. We know that it has gone from, an idea to, the current state, yet only a very small percentage of the planet has any material allocation to Bitcoin.
Yeah.
And so, the numbers, I think we all are well aware of, that of people who've actually bought more than $100 on Coinbase is very, very small. So I think, honestly, the misconceptions that exist really dig into kind of that fundamental big question, is kind of what is money? And I think that without acknowledging that, everything that, people believe or think about it is through a lens that I would say is quite distorted, because they're looking at it through that conventional lens, and they're not, to be honest, even seeing it as a new form of money. It's like that the meme where there's two little fish swimming around, and the big fish kind of goes by and kind of says, "How's the water, boys?" And they're like, "What water?" Right? And it's like when right. So when we sort of examine Bitcoin within that, within the lens of sort of our existing government fiat based currencies, it's kind of like that. It's like what water. And so, I could give you some of the easy ones, but at the end of the day, I really think, to keep it, very high level, it's just like people are missing that fundamental question.
And so not a lot of people get Bitcoin or have a really material amount right now in Bitcoin. What brought you to Bitcoin? Like, why did you discover it? What made you think about the water and notice the water around you?
Yeah. Well, sort of keeping with that same, paradigm shift and what is money. Like everyone, I remember back in, I believe, 2011 when, the Winklevoss twins bought an enormous amount of Bitcoin. Like I remember that being one of the first times I really, like, I knew about it, but that it was sort of put on my radar as like, why did they just like dump all of their Facebook money into this thing? I didn't at the time do anything about it. And then we can get into it a little more, perhaps, but I had a father who's since passed away a few years ago. He would have been like 80, I think 83 or 84. He got Bitcoin way before me. So back in like 2015, 2016, he's mid 70s, and he was trying to get my mother to buy Bitcoin. And he didn't even ask me. It's funny. I've looked back into his email that we still have, and there's all these like times where he was trying to figure out how to buy Bitcoin. I say that because we all get Bitcoin when we do, and so for me, bring it sort of more present moment. in 2019, so just kind of, I guess, say like a full 4 years ago now, um, went through some personal stuff, separation, and I at that time had to kind of go and redo all of my finances, right? So I'm sort of smack dab in Gen X, so I've been around for a little while, and I've invested, I've bought homes, but going through a separation um, is something that is a paradigm shift. It requires you to take something that you've been doing for a long time and completely have to look at the world differently, and so going through that process, um, I had to get a new house or a new place to live. And here's the thing, Robin, and this is where this is where my journey truly began. Um, I started looking at property, and I had owned a few homes in my life and had a good amount of equity. But I looked back at home prices. The very first home that I had bought, and the numbers are kind of interesting, but it probably was close to 20 years ago, and it was $167,500 for a home in a city here in Canada. And uh, when I started looking at that same home or an equivalent, it was almost three times um, the price in dollars that it was when I bought it. Except my salary had not changed, not really, in a 15-year period. I mean, it had, but not relative to the asset, to that increase in asset price. So I started, like, I kind of had a WTF sort of moment, and that really just launched this kind of, like, inquiry into. I didn't outright start asking the question, "What is money?" But that's where it started. And from that sort of initial, I guess, question, I first discovered gold, to be honest. Um, and I understood what gold was as money. I learned about that, and this is interestingly all kind of 2019, early 2020, just before kind of the halving and the sort of the March liquidity event of 2020. Um, and as I'm exploring gold, and I never ever, I can say with uh, that I never looked at any of the sort of altcoins whatsoever. But I like to say that gold was kind of my altcoin. I think there's a place for gold, but it was what sort of brought me to Bitcoin. And so, in that process of discovering gold, what is money? Um, you're well aware that a lot of the people in both camps kind of commingle, and so I started um, right kind of before the halving of 2020. I started to understand, like, oh, there's this digital version of gold, and because I had just spent a number of months studying gold, when I really started to unpack what Bitcoin was, uh, it clicked almost instantly, because I had just had this sort of schooling in gold and precious metals and the scarcity and stock to flow and all of these things. And so when I saw what that was, there wasn't really a long process, and I didn't go and look at all of the other coins or anything. I understood fundamentally that Bitcoin stood on its own as something very unique and very special.
Yeah, I think most Bitcoiners right now went through an altcoin, shitcoin phase in
Mm-hmm.
their sphere. It's interesting that because you came from a gold mindset, and gold properties are pretty much the same as Bitcoin, just in a digital realm, and have some improvements on them. Yeah, because I came from a a stock mindset. I invested in stocks a lot. I came from this Warren Buffett mindset that you have to have a cash flow. And that's why I dismissed Bitcoin for a long time, even though I knew about it. So, how was it watching Bitcoin from 2011 when you heard about the Winklevoss brothers, when 2015 with your father, and watching it up and down through crazy cycles? It's a crazy experience. And you only bought it then in 2019, 18, you said?
I would say seriously allocated in 2020.
No,
Yeah,
2020, yeah.
yeah, yeah. But I feel a little bit fortunate that I discovered it through a different process and not number go up and even though I remember vividly the day of the halving, I had no idea what it was. I mean, I did, but I just had no clue what was coming. So I feel like I had built a pretty strong thesis before the parabolic sort of run up in the end of 2020 and 2021. So I feel fortunate for that.
Interesting. Do you know, by the way, why your father was interested in Bitcoin? You went through his emails, whether something like why he discovered it, why he was so interested in it.
Yeah. So
How,
good question, and very, very important part of like even to this day, like how I think about Bitcoin and just even just thinking in general. The man was a futurist in his ability to see the world. Um, he, I think, saw a lot of things that he wasn't necessarily able to execute on. Um, I grew up with him talking about having invested in gold and silver back like late 70s, early 80s when precious metals kind of did the run. Um, he didn't really, I don't think, in any material way, like make a lot of money, but he understood at some level that 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 there was something happened when we came off of gold in 71. But I don't think he really spent the intellectual sort of deep dive into why, but at on a level he knew things were broken. And so coupled with that, he always just saw trends and sort of emerging ideas uh, way before most people. And so there was a combination of things. There was the technological aspect of it, as well as the monetary element. And I think he loved the idea of technology. I mean, he was horrible at it, uh, but he loved the idea of emerging trends and just like I really am kind of sad that he didn't get to kind of see where Bitcoin sort of is now and today. That said, I preface that because for me, that thinking around money, even though it was very just like these abstractions around like, you know, precious metals. So I was primed from a very early young age. Uh, had no idea. I'll be very honest. Had no idea the importance of sound money. Um, but at least I was primed for it. And so I will be very honest. I don't think I really it was so periphery to everything else I was doing in life. I don't even really think I had a good appreciation for the cycles and the price up and down. I just had these data points of like I have like the obviously Silk Road always sticks out for a lot of like regular people. That was something that was a big deal at that time. So I have these data points, but to be honest, Robin, um, I didn't have any opinion whatsoever, except until I really went sort of deep on it. What I would say is that for all of my sort of grown up life, um, I I very much was interested in technology, and I think it was just having grown up sort of in an analog world through the 80s and 90s, and transitioning into a digital world. So like most of my childhood was very much analog, but it was like mid-teens and up that I started to see the internet. And so, I know we've seen all the statistics of kind of how many people were on the internet in the mid 90s and how many people are on the Bitcoin network now. But I watched a couple waves of technology. I watched all of the web infrastructure of the 90s and sort of the asset bubble that existed around the internet of uh, the early 2000s. And then out of that, the wake of, all of the big FANG stocks that we're aware of. And I bought a few stocks and lost a bunch of money, but really always was fascinated with technology. When I saw around the 2010, 2011, the FANG stocks, really like the mobile wave effectively, I missed that too. I kind of was doing so many other things in life. And at the time, I had a financial advisor that was kind of managing my portfolio. So I really I wasn't looking at, this stuff. I mean, personal finance, yes, but not the investing side. And so um, when I discovered Bitcoin, um, I was kind of primed because I had really kind of missed the early wave in the 2000s, the 2010s, and I was so close. I mean, that really means absolutely nothing. But I was very close to buying a lot of like these FANG stocks when they were single digits. But I don't think I understood how disruptive they were going to be, and that they were going to scale into $1 trillion businesses because we just never had that, right? And the value unlock from the internet, um, I didn't get it. With hindsight being 2020, I told myself I would not miss the next big technological sort of innovation. And so I was already primed, having missed a couple of them before. When I discovered Bitcoin, I was like, it was kind of, game over. I was like, I am not missing this because I see this as disruptive or more disruptive than the internet was, and arguably, on some levels, the biggest innovation in human history. And I know that's a big statement.
I love that. It's a statement I can definitely get behind. So I heard that you're also in Canada. So you
Yeah,
also heard a lot about the Canadian trucker.
yeah, for sure. Yeah, yeah. I'm in Ontario. Yeah, I think I look back at sort of that time period, sort of macro globally, and what I think is interesting about that just moment in time is that uh, within I would say 48 hours of that event, the the Ukraine Russia sort of conflict, and the sanctions that occurred almost at the same time. And I think from my perspective, you know, I think in Canada there was, I think, a lot of people were um, kind of I'll say quite triggered by kind of what happened, and certainly perhaps missed some of the nuance of what occurred. And from my perspective, I really compare those two events. And at the end of the day, it was government sanctioning finances. And so I think, you know, for me, I try often to kind of look through that lens and help, explain to people who certainly, there's definitely strong opinions on what went down here. On everyone has a strong opinion. I'll say that. Um, but I think from my perspective, and I look around the world at there's so many examples. I mean, the one where uh, it happened, I think, in 2020 is 2020 in Nigeria, where the whole sort of group of protesters, mostly women, were were sanctioned from their bank accounts, and Bitcoin became a sort of a viable way to get donations through to them. So I look around the world at some of these other situations, and at the end of the day, I just think, you know, money in our current sort of paradigm, the government based monies that we have, are really all subject to sanctions, and capital controls. And I mean, sanctions and capital controls sounds a little draconian, but the reality is, like, um, try to go and get $20,000 out of a bank account anywhere in sort of North America or Europe, without questions, right? Like, it's think recognizing that the money that we put into the banking system, once it's in there, truly isn't ours. And I think that's something. I mean, I think that's something for most people that they really uh, they don't they don't realize. And you don't have to look far around the world, and I mean even domestically, obviously, to see that play out. And so, anyway, long-winded to kind of say, I really take that sort of macro look at it. And I think, a lot of people, I'll just to end on this point, I think a lot of people looked at that, and um, there was the media around it was, to be honest, it was quite horrible. Like, it really, I don't think, um, yeah, I don't think we really got a good sense, what happened as Canadians. And so, so as a result, a lot of people very much looked at it, um, you know, somewhat one-sided. And at the end of the day, these sort of measures can be applied to anyone. And I think was my biggest take home, and again, especially looking at some of these other situations globally, that if you get on the wrong side of the government, regardless of whether it doesn't matter, it's like the wrong side, and that your sort of ability to transact can be shut down. I think for me is yeah, it's pretty big use case for this. So
And it was also big because before that, people thought, oh, that's a thing that's in North Korea and China and in some other countries, but this does not come to our Western civilization. But Canada, I think, actually also awakened some people that, like, oh, in Canada, they are freezing bank accounts, they are taking people's
yeah,
money because they are protesting.
yeah,
Um, so that, I think, awakened a lot of people in the Western hemisphere to say, "Oh, maybe I have to protect my financial energy better or in another way."
yeah.
Speaking about financial energy and how to protect it, you said you had a financial advisor before, uh,
Hmm.
and I always wonder, when there's a complete Bitcoin standard and you are really good off if you're saving your financial energy in Bitcoin. And investing is only if you want to take a risk, an outsized bet, if you want to invest in a company you're truly believing in it, because it's like an wow company. Will be financial advisors something of the past?
Sorry, will financial advisors be something of the past?
Yes, when we have a complete full-on Bitcoin standard, of course, now there are a lot of financial advisors,
Yeah,
and they are giving ETF portfolios, they're giving allocations, they are telling this and that, and I always wonder, because I basically lived up in that Bitcoin world, but I've had before stocks, but I was really quickly into Bitcoin. I'm in Bitcoin since I'm 22 years old, so it's basically since when I go on in my life and when I'm 30, 40, 50 years old, it will basically my whole entire adult life will be, on a Bitcoin standard with all in there. Will that
yeah.
change?
So Yeah, very good question, Robin. I think like, and then this is something I spend a lot of time looking at, and I've been, building sort of an advisory service to kind of help people look at allocating to Bitcoin with, custody solutions and just really a wide range of entry points into Bitcoin, but also, yeah, like I said, first and foremost, the allocation strategy. So, you've seen the meme where it's like a little pie chart, it's like divided 20 different ways. It's like, Bitcoin and all of the little, right. And I think when you start to understand Bitcoin as a savings technology, right? I think we're going through the monetization of this new money. So at this point, we're getting, that sort of upside, that sort of asymmetric upside over the next number of years, perhaps, above and beyond what would be, say, a normal savings rate. But I think if you look at it through more of that lens of savings, it kind of, you start to look at all of the traditional sort of asset classes that we put money into. And these are all things that have been said before, but a few points that I'd like to sort of focus on is that we really we financialized so many different asset classes that when we're talking about investing, I almost use air quotes around that because I would argue most people do not invest in the stock market. They save in the stock market, right? Investing requires you to look at the performance of a company, an individual, stock. You run all of the sort of financial analysis. You look at all the ratios. That's investing, right? To buy a market basket of the S&P 500 and a bond portfolio, and that's really just saving your money in the stock market, right? So we know that the S&P 500, nine whatever it's directionally this number, but 90% of the gains come from the top 7 companies, right? Yet people passively allocate incredible DCA, incredible amounts of money into these ETF structures, um, effectively propping up so many companies within that whatever bucket, that probably are effectively zombie companies, right? But what I think is important there is that at the end of the day, we are just using a lot of these as savings vehicles, and we're trying to you know beat effectively beat inflation. I mean, uh, looking at it more nuanced, it's like we have to have our hurdle rate, or the what is the number that we need to get over to just stay stay in place, meaning like we're not getting ahead, but we're not getting behind. And I mean, a lot of numbers get thrown around, but that 7% sort of inflation rate of kind of the monetary base is something that if you're not if you're making 8, 9, 10% returns in the broad market, you're just in nominal terms your portfolio goes up, but in purchasing terms it's probably not doing so great. So a little bit long-winded, but I think what we're going to start to see as the ability to put money into savings through Bitcoin will slowly start to drain. I don't know how long this will take. I mean, I think there's a lot of people have got a lot of theories and frameworks around this, but at the end of the day, I think what we'll start to see is, the best money will prevail, and this notion of saving versus investing will radically change. And to your point, there will be a point in the future where uh, you will there still will be investments, right? You will still invest in good quality companies and ideas and people, um, but you will have to assess it against a hurdle rate of, what is your cost of capital, and whatever the future uh, appreciation of Bitcoin is, various numbers out into the future, kind of 10 to 15%. You're going to need a compounded annual growth rate exceeding uh, Bitcoin as just this new, monetary, uh, this paradigm shift in monetary saving, that you can just simply save in this hard form of money, and not really have to worry about that it will not have, sorry, not worry that will go down in value, but that it will continue to appreciate. But all of these investments will require at some sort of future state, that you are going to exceed that sort of cost of capital. And so I think what it will do is it's just kind of, it's going to incentivize us to be more deliberate in our risking capital, right? Like I think we will be more intentional with how we deploy capital. Full stop. Because right now, I would argue, we, as a global society, we risk capital. We are out so far on the risk curve, right? Because of all these inflationary effects, that in order to not only preserve but to grow our capital, we need to take on a lot of risk. And so, we've seen just completely insane things, whether it's just some of the meme stuff out there, the meme stocks, and just the things that people have done way out on the risk curve. But I would say that even though we can look at it and some of these ideas are kind of crazy, it speaks to this world where people have to take on more risk in order to grow their savings. And so, yeah, I think we'll end up seeing like just a focus on better, good ideas, and that the barrier to deciding to deploy capital, it will be much higher,
Yeah.
because we'll be assessing it against that Bitcoin hurdle rate.
I had, when I came into investing, I had a lot of success with Tesla stock, with Apple stock. I went with Tesla above the 1,000% gain. And because of that, people in my family and friend circle came up to me and asked me what I did, because they also want to protect themselves from losing financial energy. They want to flee inflation. They wanted to gain also something. And I always tried to explain to them what I did. I did actually investing work. I researched about companies. I listened to the quarterly calls. I read the 10Ks. I read the 10Qs. I was really deep into a company. I had so much knowledge about Tesla. I once met a Tesla employee, and he was shocked how much better on some part of the company I knew the company than himself as
Yeah,
a Tesla employee. And I realized afterwards that I tried to put people that just wanted to save money into the investing category. And with Bitcoin, I realized that saving should be easy. there should be an vehicle where people can just like, okay, this savings rate I just put in there. And if I want to invest, I put in the time, I really research about it. And there is the value also then created when you really spend the time and really try to find the better stocks. And this is where my question was going, because when we are on a Bitcoin standard and Bitcoin is a sound money, a lot of companies will have a negative growth against Bitcoin because they're not doing well. Only the companies that are really good in acquiring new customers, growing, doing new technology, they will outperform Bitcoin. When we are on a complete Bitcoin standard, I'm talking.
Yeah.
So this will, I think, drastically change the whole financial advice and financial market completely, and will make it a way higher profession being a financial advisor. And maybe because now you are having a bank employee who gets like some courses, and then he's your financial advisor and says, "Oh, this ETF and this one." So this is what I meant with financial advisor will. Uh, are they dying off because of that?
Yeah, and Robin, I would just I would also add, if we look at some of the disruption of, the internet, right, where we can look at Blockbuster and Netflix and Kodak and the digital camera, and there's so many examples. I think when we look at through the things that Bitcoin potentially will disintermediate and impact sort of legacy, um, you know, entire fields, professions, industries. I think you are correct. I think there will be a radical change. We won't, I don't think, need as many financial advisors around creating elaborate portfolio construction. Um, I think it will be a long time before that doesn't exist. I don't think directionally that's where we're headed, but I think that notion of needing someone else to offload that risk management, right? So if we don't have to accept or take as much risk, then and that's why arguably most people have a financial advisor, is to have a professional, and they are, and they can create elaborate risk models around all of your goals, and just how you want to allocate your capital based on where you're at in life and all those things. I think important, but if we're able to de-risk the entire sort of financial world with a new monetary standard, I would argue that they're going to play less of a role in uh, advising specific products, and probably more around the planning part. I think financial planning, it will still exist on a Bitcoin standard, but that idea of offloading risk management to someone else, I think, will absolutely change.
And you said also servicing and helping people on the self-custody side. I think
Yeah.
this we absolutely need. There, I see it every time I go on with my relatives, with people on my friend circle that they don't know about Bitcoin and they try to get in. They need a lot of advising, a lot of teaching, a lot of education in the beginning, because they never dealt with cryptographic technology. They never dealt with keeping their own keys.
Hmm.
They think it's just a password. They can reset somewhere, or because they have an email. Like this whole idea is completely new. But email also was new at some point. Having an account somewhere was also new. So like we have to. We have to do a lot of education in the next, I think, let's say 5, 10, maybe even 20, 30 years.
Yeah, agree. Yeah.
Where do you fall on the privacy side of Bitcoin? There are a lot of Bitcoiners that say, I only try buy P2P, only peer-to-peer. I don't want any KYC. There's some, okay, light KYC is okay, like Relay 21 Bitcoin, it comes to my mind. It's
Yeah.
okay. There are even some exchanges. I was on one of these exchanges. I'm no longer on there since a long time. I'm really glad they asked me where my money was coming from. And they asked me for proof where it's coming from. That was way too much for me. And then the longer I'm in Bitcoin, the more and more I move away from KYC and more to the P2P, to peer-to-peer market.
Mm-hmm. Good question, Robin. I think I've been listening, I'm sure as we all have, to like a lot of the commentary on the upcoming ETFs that are coming to the US markets in the next short while, right? And we know that those ETFs are going to absorb an incredible amount of Bitcoin, that there will be uh, enormous pools of capital. I think sometimes we don't realize just like how significant those will be. And I would argue for a lot of people out there, they're probably it's probably where they're going to allocate capital. I think we have to be just outright honest with that. Canada's had access to spot ETFs. We had the first in the world. We've had them for a couple of years. And I think for a lot of people, there's advantages. Now, what I would then say is the importance of having a money that we control, that we can hold, a bear asset, is something that in a digital form this is a first in human history. All right. And for all of the early adopters that have, come along, and, we know how many coins are missing or lost. We know how much has been held by long-term holders. We know those numbers just keeps going up and up. We know that exchange balances are draining just as we head towards halving, and all of the macro catalysts, including the ETF. I say that because I think it's super important for those that currently hold Bitcoin, in a self-sovereign, cold storage, way, to really provide, you know, education, especially as we go through the adoption of these ETFs and just the pools of capital that will be unlocked. I think it's just super critical that we remain very sort of on the focus of making sure people understand the differences. The reality is, the vast majority of people are going to probably utilize Bitcoin in some, they will not interact on the base chain. Most people will not. But I think that makes it all the more important to really, for those that have invested the time, understanding the importance of securing your digital gold bars on the base chain, that we sort of remain very committed to kind of keeping as much of the network in sort of private hands, keys managed, off chain, in cold storage, because we know that places like BlackRock and all of the other ETF providers, and those are just the US based ones. There will be more and more around the world, and there will be more sort of institutional custody that will continue to, absorb um, existing Bitcoin. And so I know it's not exactly what the question that you asked, but I think that this idea of um, privacy is extremely nuanced, and I think there's an incredible need, and perhaps it's more relevant in other parts of the world right now. But I think as a Bitcoiner in sort of the Western world, like we do have a lot of financial privilege. Um, but I also think that it's equivalently good to sleep with one eye open as well. So I think from my standpoint, just to sort of sum that up a bit, we really need to be aware that uh, that there is we're at the they're going to fight us stage of this sort of call it of this revolution. Maintain all of the elements of privacy and build the tools in the infrastructure to support that. I think super important. Um, yeah, I think it's super important. I know that's sort of long-winded in a few different directions, but I see this sort of almost this competing tension, and the importance that Bitcoiners really need to kind of stay focused and vigilant on these tools, recognizing that the vast majority of people will not. And so continued education, but also internally continued just like recognition of how important it is to maintain some of those kind of levels of privacy, even though I think the vast majority of people, unfortunately, aren't probably going to. I don't think they will adopt some of these important parts of Bitcoin, and I think it's sad, but I also think it's probably the reality. But also, it also is just the importance that we need to continue to focus on it.
Is it dangerous for Bitcoin if too many people don't realize those tools?
Yeah, I honestly, I think no, yes and no. I think I think having these conversations and being sort of challenging, like sort of all of those sort of the what if scenarios as this thing keeps growing, is important. I just think it's unstoppable at this point. It doesn't mean it can't be slowed down, or in certain jurisdictions, like you know, somewhat neutered a little bit, but I mean, the internet exists in every single jurisdiction in the world. And we're at that point where I don't think it can be stopped, but that doesn't mean that we should take for granted anything at all at this point, because even though it is a very distributed network, I think for me, the consolation is that the early adopters at this point, I mean, we know what the long-term holding rates are right now through like the last 24 months all the way down to 15,500. It didn't change. And I firmly believe that there is a very material part of the Bitcoin network that will never, it is going to remain in cold storage. And I just think, as I said earlier, the importance of, um, that holder base, that long-term holder base, almost as a contra to the institutional capture. And I don't say capture in a negative way, but it's just the reality of perhaps what's coming, for us to just really hold as much as possible. Interestingly, it's like, I recently watched the Dan Brown, the Da Vinci Code, and if they had the priority of Scion, where sort of the keeper of the bloodline is, in a way, it's like it feels a little bit like that, where we um, for the holders that have embraced self custody and um, all the various privacy tools that sort of come with that. It's like we're protecting the network and running our nodes and all of those things. But I think it's something important that we need to um, not forget, that there is, we're, there's an expression, the golden rule, he who has all the gold makes all the rules. And we've seen that play out for millennia, for thousands of years, right? And this, in the first time in, I would argue, human history, just completely changes that. That and so when you have a decentralized monetary network that is outside of the control of the rule makers, they are going to do everything in their sort of power to exact control sort of over that, because they have for all of human history, right? So this time will be no different. And so I just think, just a important message to all Bitcoiners who hold cold storage Bitcoin is that it's if it comes out of cold storage, and I'm not suggesting we shouldn't use it or sell, or I mean, that's what it's about. It's, I think, but I also think it's recognizing that, I think enough of us realize that keeping it um, protected in cold storage for the long term is just super important and critical to uh, to the network, and that sort of balance of how much Bitcoin will probably end up within these regulated structured products.
No, that's a great point. We are already far ahead in our podcast, so I will come now to our
Yeah. Yeah.
end routine already.
Yeah.
If you saw the podcast before, you know that the previous guest asked a question for the next guest. My previous guest was actually on, I think, 2 hours ago, so it was
Nice.
quite before that podcast, and he had the question for you: why Bitcoin? But explain it to me like I'm a 5-year-old.
Ooh, yeah. Well, I have a 9-year-old, and so has been around since, really much since since they were five. And around that time, Rob and I got my kids. I have now a 9 and a 13-year-old, but so at the time a 5-year-old, and they had an allowance and they were saving money, and I had an app where they could see their savings and you know spending and savings account, and it was just all on an app just to kind of keep track of things. But um, I think they were trying to save for something, where it probably was going to take a number of months, and um, I I I had this moment where I had to try to explain to them that the price of the thing was going to keep going up, and they had sort of a little bit of a WTF moment, right? They were saving at a certain savings rate, and yeah, they had their, I think, first sort of like realization, like, without knowing very much at all, that Bitcoin was going to um, allow them to save for things quicker. Um, Also through that lens of a 5-year-old, or more, any kid, um, they and I, you kind of said how old you are, but the reality is, like, kids now, like, growing up grow up in a world where digital things have value. And I would say that, to circle back to your very first question around the misconceptions, I would say that probably is one of the biggest ones. Most people do not, they cannot see that this thing, this digital money, has value. And we have digital things in our lives, photos, music, information, knowledge, uh, and that we all ascribe a certain amount of value to. And I think that's to answer your first question last. I think that's one of the biggest things, people just not seeing or understanding how this thing can have value. With kids, 5-year-olds, 10-year-olds, they have grown up in a world where digital things have value. And I'll say this, Robin, I, to be honest, think that most kids get this infinitely quicker than grown-ups as a result of that. They just like, of course, digital things have value. And so this is just, yet one more thing. And it ties again to that ability to save and see, their savings grow quicker in time versus, uh, inflating away. So
Yeah, this is why I was really impressed by your father, because he was, what, 70, 80 years old when he was interested in Bitcoin. I see a lot of older people, like above 60 years old. They have a hard time understanding that something you cannot touch has value. Kids, they buying skins in some video games. They know the value of digital things. We don't have to teach them that. Maybe we have to teach them properties of sound money. Older people know more about the properties of sound money, but they sometimes have the problems. It's digital. How can it be value? I can just copy it. I get that a lot. I can just copy Bitcoin. When I make, like, Bitcoin itself is scarce, but what if there are like 20,000 Bitcoin? Then it's not scarce anymore, right? So I
yeah,
get that a lot.
yeah, for sure.
So I was impressed with your father. You said, like, how old was he? 75, 80 years
Yeah,
old?
yeah, yeah,
That time, that early in Bitcoin, it takes a lot of curiosity and openness to learn at that age. Such a complete new technology. I think for youngsters, it's more easy for like 20, 30, 40 years old people.
yeah, yeah, for sure.
Um, where can people find you? Where can they best get in touch with you? What can they find out about you on the internet?
Yeah, for sure, Robin. I think on X is probably the best spot. Jeremiah Soucie. You can throw up my handle. I've got a LinkedIn presence as well, but I think the best spot to find me is on X, Twitter, for sure.
Oh, perfect. Thank you for being on.
Thank you so much.